Good afternoon, everybody. So I recently participated in a TradFi trading conference where somebody from the audience actually asked, why is Web3 relevant to us and why is it important to us as well? Let me share the story which I shared with them during the event itself. Last year, during the Metaverse craze, I got curious about Decentraland, and I wanted to go on to check it out because one of its plot of land went for almost $1 million, right? So I went there about 5 to 10 minutes. After 5 to 10 minutes, I got a bit giddy, maybe because the UX wasn't that great, or maybe because I just wasn't used to it. So I was ready to give up. My 10-year-old son walked by and he said, "Hey, Dad, this looks interesting. Let me try it out." And so I said, "Go ahead." And I went to do my stuff. 10 to 15 minutes later, I heard a shout from my son. He said, "Hey, Dad, check it out. I'm actually riding a dragon." My 10-year-old son figured out how to ride a dragon in a metaverse in such a short period of time. They are this fast. Any company who wants to succeed in the next 10 to 20 years must have a Web3 angle, must have a Web3 strategy in place, because the next generation of customers, the next generation of users are already in the digital space. Before I continue, let me quickly introduce myself. My name is Kelvin. I spent 15 years trading in New York and Singapore as well, and I'm now head of trading at Coinhako. Coinhako is founded in 2014, based in Singapore. We are fully licensed by MAS. We are Asia's premier crypto platform, offering digital services to institutions, family offices, high net worth, and retail customers. Do check us out at our booth at P8. So it has been a rough 6 months. We all know that, right? So, and as head of trading, I get many questions. Where do we go from here itself? Let me share you a story, this time for the crypto crowd itself, about Einstein. In 1942, Einstein was actually teaching in Oxford University, and he had just given his class their final exam paper. So after the exam, Einstein and his teaching assistant was walking back to the office, and the assistant finally plucked up his courage and asked Einstein, "Professor, did you realize that the paper which you gave to the class was the exact same paper you gave last year?" Einstein, being Einstein, he was like, "Of course I know. I know that this is the same paper." So he got curious. "Why, sir? Why did you give the same paper?" To which Einstein replied, "Because the answers have all changed." So this is physics, already with a few hundred years of history, still finding that they are making errors, still finding that they have the wrong answers. Crypto is only about 10 years old. We are allowed to make mistakes. We are allowed to find that we have the wrong answers. But we must have the humility to admit that we have the wrong answers. We must have the determination to figure out to find the correct answers itself. In a bull market, it's very easy to pick winners, right? In a bull market, everybody or anybody can be a successful trader, can be a successful investor. But it's only during the bear market where true value emerges, where the strongest company will emerge, the strongest project that have real world value will emerge, and the people with the most passion will stay on. That is the bull market. That's the bear market. Do not mistake the value of blockchain technology with the actions of some bad actors over the past 6 months. When I was given the opportunity to speak today, I thought of doing something different. Everybody is talking about Web3, blockchain, different currencies, everything. I thought of tackling something difficult, pertinent, but not often talked about in investing and trading, which is the human psyche. Like it or not, human psychology plays a very important part between the success and failure of trading or investing. How big a part? Think Wendy Rhodes from Billions. For those who know the show, you understand immediately. For those who don't, yeah, you can go check it out. Not now, though. The problem with TradFi trading or investing is that most of the financial strategies, most of the financial models rely solely on numbers. Numbers are important, right? But what it does not capture is the value of sentiments, the value of emotions, or even the value of culture. Let me give you an example. This is my very first NFT. This was chosen to me by my son. One night we were going through all the NFTs and I was like, "Hey, Dad, this looks like you. We should get it." And so I was like, "Okay, let me get it." I was skinnier back then. So this NFT probably cost less than the gas fees which I paid. So based on financial models, for example, this might be valued, for example, about $10. If somebody offers me $1,000, financial analysis will say that I will make 100x from this NFT, right? And most recommendations will be to sell it. But I won't sell it. Why? Because what this $10 or $1,000 do not capture is my intrinsic value of my attachment to this NFT. This is my very first NFT. This is chosen to me by my son. When I grow older, I can actually pass it out to him and to future generations as, for example, a family heirloom. So the issue with a lot of those successful people in the TradFi space, a lot of people say that crypto is worth zero. What are they not capturing? They are not capturing the intrinsic value of the need for an alternative financial system. Whether their financial models are right or wrong, but there is an intrinsic value, and as long as there is a need for an alternative financial system, crypto value cannot be worth zero. But in trading and investing, numbers are very important itself, because numbers are logical, we understand numbers. Let me give you an example. We all understand that the probability of us making money over a one-day period is 50-50, and this probability goes higher as time goes further. So that's why we understand the concept of time in the money, not time in the time in the market, not timing in the market, right? And a prime example of this being used is in Amazon, right? This example is being used both in the TradFi space and also in the crypto space. So the example goes like this: if you have bought Amazon at the highest in 1999, you would have suffered a 95% drawdown underwater for 10 years, but you have kept it all the way till 2021, you would have made over 3,000% gain. So this example is a prime example that people like to give about being a long-term investor in a very good asset class. So this is an example we use for Bitcoin as well, right? These numbers are very, very logical, but these numbers are unreasonable. Why is it unreasonable? Because it's unreasonable to think that anybody can withstand a 95% drawdown. Why is it unreasonable? It's unreasonable to think that everybody can have the discipline to hold all the way to a 3,000% gain. So numbers are unreasonable. Why is it? The reason is because we have our emotional baggage. What's emotional baggage? We like to compare with our peers, and we like to also, we are fearful to let down our spouses. So these emotional baggages cause us mental stress, which causes us to make illogical decisions very often at a very wrong time. This quote I love this quote because this quote sums it up perfectly. This is by Victor. Victor is actually a market wizard that is being featured at Jack Schwager's famous book. He says the key to trading success is emotional discipline. If intelligence were the key, there will be a lot more people making money trading, which is true. You can have the best strategy, you can have the best investment, you can have the best numbers, the most optimized parameters, but without the mental fortitude to follow through your strategy, to be disciplined and keep to your strategy, there is no use. The strategy will be thrown out the window at the first sign of stress. So emotional discipline is key in the success of trading and investing. But we must also be conscious of how stories and narratives can affect our decision making. What do I mean by that? Stories and narratives drives every aspects of our lives. When we were young, we all know the story of Washington chopping down a cherry tree, right? This drives the narrative. What narrative drives? Honesty can make you successful. In the East, we know Romance of Three Kingdoms and the character Guan Yu, his story of 过五关斩六将, going through 5 passes, cutting down 6 generals. What narratives does it drive? It drives to see his swan brother Liu Bei, right? What narratives does it drive? It drives the narratives of loyalty. Loyalty to your family, loyalty to your country, loyalty to your company, for example, right? But in nowhere, right, except in the finance industry, where this kind of narrative can garner an immediate financial gain, right? Drive the narrative that this stock is the next Amazon, drive the narrative that this coin is the next Ethereum, prices go up. If you're successful in driving the narrative, you make an immediate financial gain, right? The problem with human psychology is that the more we want it to be true, the more we overestimate the probability of it being true. That's why in crypto, there is so many rampant and successful pump and dump schemes. But this doesn't just happen in crypto as well. This also happens in the TradFi space, right? We know who this is? Bernie Madoff, right? Bernie Madoff drove the narrative that he's a very successful trader, very successful individual investor. And a lot of people want to believe him. Very smart people, very intelligent people want to believe him. Despite the red flags. What kind of red flags? Firstly, very, very consistent returns despite the market fluctuations. Secondly, being audited by a relatively unknown accounting firm. Thirdly, refusing to share details of his investment strategy despite being asked. These are red flags, but people chose to ignore it and chose to believe the narrative that he's a very, very successful trader or investor. So narratives can be very misleading. We need to do our own research. We need to have emotional discipline to resist the urge to jump on any narrative, right? Because jumping on any narratives will lead to very, very bad decisions, right? Investment decisions. So let me stop here and give you one example right now. Imagine I have a piece of paper here and I fold it into half. Okay? And if the size, the length of the paper is double, right? How many times do I need to fold in order for this piece of paper to reach the moon? The very common answer is about a few hundred times or maybe even a few thousand times, because the distance between here and the moon is about a few 100,000 kilometers away, right? But the actual answer is 42 times. If I fold this piece of paper 42 times, I can reach the moon. Humans are trained to think linearly. But the problem is that risk in the market is not linear. It's non-linear. It is actually convex. Let me give you an example, 4 examples in the TradFi space. In the fixed income space, it's Turkish bonds. In the FX space, Russian ruble. In the commodity space, nickel. And in the equity space, more famously, GameStop, which started the meme stock craze, right? So if you look at the price action and the risk, we are managing non-linear risk. We are managing convex risk. But having a linear mindset will lead to disastrous results, right? So we need to have a non-linear mindset, because what it does, it gives us better risk management. Trading is not just about maximizing top side, but also minimizing your downside, right? So that's why Coinhako focuses on risk-adjusted return, not absolute return. What do you mean by risk-adjusted return? Let me give you an example. One project offers a potential of 60% gain, but a potential drawdown of 80%. The second project offers you a potential upside of 30%, potential drawdown of 10%. A lot of people in crypto over the past couple of years will recommend the first one, because what they do, they look at the absolute gains of 60%. But Coinhako recommends looking at the second project, because in the long run, the second project will shine because it has a higher risk-adjusted return. We are also focusing on 3 factors that will drive mass crypto adoption. Simplicity. Simplicity in the user experience, because some may be too complicated for those people, novices, that want to learn. Simplicity in the products, because any extra layer of complexity in the products will mean extra risk for the customers and also for the firm itself. Second, security. Security has 2 aspects also. Security for the customer's assets. Second aspect, security for the value of the customer's asset. Coinhako has a very experienced security team led by our CISO. Also, our trading team has years of experience in TradFi that will help risk manage the value of our customer assets. Third, regulations. We are fully regulated by MAS. We always believe in a compliant-first approach and being on-site with the regulators, because we believe that working with the regulators, then we will be able to increase the adoption of crypto. Again, find out more at our booth. To end off, let me share you a story about this Persian king. Years and years ago, this Persian king was feeling very lonely, very down. So what he did was that he gathered a group of wise men, including the very famous Persian poet Atta of Nishapur, in order to come up with a phrase that will last all time, will make him happy at all times. So the wise men contemplated for a while, and then they came up with a phrase which the Persian king was so happy that he inscribed it on his ring and wore it at all times. What did the inscription say? "These too shall pass." It signifies the impermanence of everything in life, and everything will change. We may be experiencing a winter currently in crypto, but remember, winter never fails to turn to spring. We were built in the winter. We will sow during spring so that we can harvest during summer. Thanks a lot.